The question for this year's budget is not whether Rachel Reeves will break her promises, which promises she will break. Will it be the ones that she made at the general election, the big promises not to raise national insurance, income tax or VAT? Promises that she pretended not to break last year, but nobody believed. It was the sort of thing that gives politicians a bad name, when she pretended that increasing national insurance on employers was not an increase in national insurance according to the small print of their manifesto. I mean, it was prestidigitation of the worst kind. But nonetheless, she pretended she wasn't breaking her promise a year ago. Will she break it clearly this year with an increase in VAT or national insurance? Or will she break her smaller promise, one given at the time of the last budget, when she said that she'd used her big bazooka, that she'd solved the problem, that the Tories' black hole had been removed, and now she would never need to do the same thing again? Which set of promises will be broken? Because anyone who follows the economy knows that what she needs to do will be her fault. It is a budget, an austerity, a tax rise made in Downing Street and the Treasury. Because those decisions last year had a profound effect on economic activity. In the run-up to the budget, the government talked the economy down. It made people worried, it stopped people investing, it stopped people employing, it made people change their behaviour. After the budget, national insurance rises meant that employers couldn't take on more staff, and now unemployment is rising and employment is declining. It meant prices had to go up to fund the extra costs being put on businesses, and this led in turn through inflation to higher interest rates for the government, for you, the taxpayer, to fund the national debt, and that means less money available for everything else. So this set of problems are really Rachel Reeves's problems that she has created and she has designed, and which she will now probably make worse in the budget with further tax increases. And the question for today is, what can you, the taxpayer, do to prepare yourself to forestall some of the worst consequences of this budget? The rumours abound, and this in itself is a bad thing. Historically, chancellors went into purdah, and nothing came out of the Treasury in the run-up to a budget to try and stop these kites being flown, these hares being set loose. It was to ensure that people didn't get worried about things that wouldn't happen. But now the Treasury and Downing Street give briefings suggesting all sorts of things to see how the public responds and then decide whether or not they're going to do them. And this creates economic uncertainty. It means people take actions that they wouldn't otherwise need to take, or they delay transactions. One of these areas that's very clear this time is property transactions. The property market is frozen. And why is it frozen? It is frozen because the government has been talking about changing stamp duty land tax and perhaps putting it onto the council tax or changing it somehow or another. So anyone thinking of buying a house between now and the 26th of November is waiting and thinking, well, I won't do it now because it could be a different tax regime. This is really bad economically because people moving house has knock-on economic effects of a positive kind. Removal companies have work to do, decorators come in, builders come in, new furniture gets bought. All these sorts of things boost the economy. But they're frozen because of gossip coming from the government, briefings, off the record, nods and winks being given to journalists about something that may not happen at all. So bearing that in mind, and that some of the things talked about won't happen, what should the intelligent taxpayer do? Well, some things are simple, and some need careful financial advice, and I will divide them up. One of the things that everybody can and should do is use their maximum ISA allowance in case that gets changed mid-year. So if you haven't already put the money in, if you normally leave it till March or the very first days of April, do it now. Put the money in. The amount, the limit, won't be cut retrospectively to stop you putting in money this year. One thing you can do. Similarly, you can put money into your pension fund if you've still got capacity to do that. You could use this year's allowance to put in as much as you can for 2025-6. Really straightforward, non-contentious things to do. The next set of steps that you can take really will depend on your financial circumstances, and you should talk to your advisors about it. So I'm just talking about it just to give suggestions, thoughts as things you may want to do. The first is capital gains. I don't know if capital gains tax will go up, but it certainly won't go down. So look at your investments, and if there are any that you were thinking of taking the gain from, you may well be well advised to do it, because the rate may remain flat, but it could go up. And indeed, the tax-free allowance could be reduced. So that's one of the things that you could think about doing. The second thing you could think about doing, if you're in an inheritance tax problem, is give things away in case there's any further change in inheritance tax. Either out of your income, the free gifts that you can give, free gifts, tautology, my apologies, but the gifts that you can give free of inheritance tax out of your annual income. I doubt that will change, but why not think about giving money to your grandchildren now rather than on the 27th of November when it could be harder? That's one option. If you're thinking of your pension, you're coming up to retirement age, or in fact you're aged over 55, it's a young age, you can take 25% out of your pension tax-free. So you want to think about that, because that's certainly something that's been talked about being changed. There is a risk, of course, on this, that if you take the money out, you can't put it back in again, and you then lose the tax-free benefits of rolling up the gain tax-free. But if you were anyway thinking of taking some money out of your pension pot, do it now. Don't wait until after the 26th of November. Don't take the risk. De-risk your financial situation, and in that way try and reduce the tax burden that will fall upon you. If you own your own company, you may want to pay dividends out to yourself before the 26th of November in case the dividend tax rate goes up, or indeed income tax goes up. If you've got control of pools of money, you may want to use them before any change in tax rate clicks in. So that's just suitable financial planning depending on your circumstance. And if you're a non-dom, you may want to wonder whether you can afford to stay in this country, because one of the things I'm very worried about is an exit tax. Bill Clinton introduced an exit tax on American citizens in the 1990s. If you give up American citizenship, America has worldwide taxation, you have to pay an exit tax as you give it up. I just wonder whether the Chancellor may not be tempted to apply an exit tax both to non-doms who think of leaving, but also to British citizens who want to go abroad. So again, if you're thinking of doing it anyway, better to do it before the 26th of November than after. It's all about arranging your affairs in a way that legitimately and legally means you pay the tax that is liable today, not the higher rates that may come in tomorrow. Sadly for all of us, whatever she does, it won't solve the problem. Because the truth is we are spending too much and we are earning too little. This isn't earnings in tax, this is earning as an economy. Our economy isn't growing, and increasing taxation will actually make us grow less. We are regrettably in that doom loop, that downward spiral that is making higher taxes lead to less revenue. And Rachel Reeves, frankly, is delusional about that. She gave an interview saying, oh, well, I hit the non-doms and I hit VAT on schools and nothing happened, it was all fine. This is nonsense, baloney, if you'll allow me an Americanism. Thousands of people have left the country because tax is too high, taking their money, their wealth, their investments, their employment with them. Thousands of children no longer get the education they were getting because their parents can't afford to educate them, and dozens of schools have closed. Both those decisions had a profound economic impact and have led to a less active economy. And that's what Rachel Reeves seems quite incapable of understanding. And so she says she'll hit the rich once again. And the really rich will leave. The really rich are mobile, the really rich are fleet of foot. They've probably gone already. It won't be the rich who get hit. It'll be those who are doing well, improving themselves, earning a little bit more, who will be disincentivized, who will have no reason to work that extra few hours, no reason to ask for that pay increase because it will all go in tax. But if people don't work the extra hours, they don't create the extra productivity, they don't create the extra economic activity, then the economy doesn't grow and the tax revenues don't come in. But the expenditure's going up because Rachel Reeves created more inflation, and that has to be paid for. So she'll be back, well, if she's still in her job. Next year, she'll be back for more tax rises. That's why her second promise, her little promise, as I called it, is actually very important. Last year, she so misunderstood economics that she thought increasing taxes would solve the problem. It didn't, because it can't. And to do the same again this year is the triumph of hope over experience. It won't reduce the gap. And therefore she'll come back next year until she eventually realizes that the only way to pay our way as a country is to cut our coat according to our cloth. And that means spending less. She can't do that because the Labour backbenchers won't let her. So what's my advice? Prepare yourself for the budget, take the reasonable steps that you can, but I'm afraid also hunker down because we have a winter of economic discontent ahead of us, which could last for several years. Thank you as always for watching. I'm sorry to be so gloomy on this occasion.